Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Monday the 30th of the 8th, 2021. Time is just gone 0440, 20 to 5 in the morning GMT. Asian session coming up, closing, European session coming up, our lunchtime North American session. Right, yesterday, Friday the 27th, the last trading day, we had a negative opposed driver in the dollar at minus 29. Excuse me. Front and back door flows mainly going into the pound at plus 114, into the euro at plus 49, and the yen is the negative rock at minus 34, activity plus or minus 163. Last week, just to remind you for context then, this is from Monday the 23rd to Friday the 27th, last trading week, we had a positive opposed driver in the pound, plus 318. Front and back door flows mainly coming out the yen at minus 300, out the dollar at minus 220, and the euro was the positive rock at plus 202, activity plus or minus 520. Intra-week then, this is the Asian session to about 15 minutes ago. We got a positive unopposed driver, a negative unopposed driver, if I could get that right, negative unopposed driver in the dollar, no backdoor flows, and it's the positive opposing flows are mainly going into the euro at plus 19, into the yen at plus 9, and in the pound is the positive rock at plus 5. Activity plus or minus 33. So last week then we had pound strength driving, mainly coming out the yen and the dollar, with a bit of euro strength. And Friday we had a negative driver in the dollar, so we had a soft dollar on Friday, pushing flows back into the pound, the euro, with a bit of a soft yen. And so far in the Asian session, we've got this unopposed negative driver in the dollar. Right, stop it there and we'll write up the flows. Right, we're back. We've written up the Asian session flows then. So we've got the euro is strong across the board. The yen is strong except against the euro and the Swiss. The pound is strong except against the euro, the yen and the Swiss. The Swiss is strong except against the euro. The CAD is weak except against the AUD and the NZD. The AUD is weak except against the New Zealand dollar, NZD. NZD is weak across the board, and the dollar is weak except against the CAD, the AUD and the NZD. So what have we got then? We've got euro strength across the board. We've got New Zealand weakness across the board. And if you look at the dollar, remember the dollar in the Asian flows was the negative unopposed driver, so it was the weakest in terms of the majors, the euro, the yen and the pound, but it's actually got a bit of strength against the CAD, the AUD and the NZD, the commodity currencies. So that's interesting, something to point out. Right, so what's going to knock it about? What has knocked it about? Right, so basically Japan, we had tier 2 retail sales out this morning, early, positive. Maybe a bit of a boost from the Olympics, who knows? But then well, that's debatable anyway. It was positive and it was tier 2. We've got German CPI today. Tomorrow we've got China manufacturing and non-manufacturing PMIs, Euro CPI and CAD GDP. On Wednesday we've got AUD GDP, German retail sales, US ADP and the US manufacturing PMI. So basically we're talking about predominantly inflation data, CPI and PMI data coming out. Don't forget we've just had this Jackson Hole summit and we've had the Fed meeting and minutes and what have you. And they will have been aware of the up and coming inflation data, so that's something to bear in mind. The other thing on the horizon literally is Hurricane Ida, which has whacked New Orleans and surrounding area, and that's had a bit of an effect on the oil price on the up. Right, so We'll stop it there and we'll write up the asset classes. Right, we're back and we've written up the asset classes. US dollar index then, so the dollar index has had that double top. It broke the double top, it's come back. It's 0.29 from the high, so it's come off 29% from the modelled high. Basically that's where we are. Gold should like that in theory, and it's gold was soft previously and it's now 0.45 from the high, so gold is finally above half marks. Oil then, we've got this Hurricane Ida issue, and gold is at 0.5, so it's gold, oil's at half marks as well, having had a pretty roller coaster ride. Wall Street then is above the high, and as is the S&P and the tech. So equities are holding above their recent highs. Excuse me. US 10-year then, we've had this big pump up in the price of the bond, yields coming off. Then they've come back a bit, and we're now at 0.40 from the high, so we're 40% off the high. So and the high is obviously minimum yield. So we've got a bit of yield strength there in the US, and the bund is 0.26 from the high. So we've got less yield strength in the euro, relatively speaking. Copper, big chop for a long while, big break, then thump right down. It's now 0.40 from the high. So copper's coming back. It's 0.4. It's 40% from its recent high. US steel sort of had this break after a very weak period. It's not now 0.31 from the high, so it's about a third off its high. Right, so we'll get rid of that, and then we'll try and make some sense of what's going on, and then do the final analysis. So we've got a sort of a fairly mixed picture, which is difficult to say the least, but we'll have a look at it. Right, so we've got, in the Asian session, we've got predominantly dollar weakness against the majors, complete dollar weakness against the euro, the yen, and the pound. And remember, if you get a negative unopposed driver, albeit in the Asian session, it means one or two things. It either means a further ramp down in the dollar, or a pause and a floor in the dollar. So it's either going to be this sort of situation, or it's going to be a further pump down. So that's where we are there. And if you remember that the dollar is strong against the commodity currencies, so the commodity currencies are pretty weak. Right, so we've got NFP week this week, so non-farm payrolls Friday, ADP Wednesday, and the market's sort of like getting its head around the tapering from the Jackson Hole, the previous Fed minutes, etc. Excuse me. So, and we've got in the overall in the flows, we've got euro strength, significant euro strength at the moment, and that's where we are there. So, and we've got equities at highs, with the transmission that's associated with that, and the pound is taking a back seat in terms of direct data or flows. Right, so what it remains, the key to it is are we looking at a floor in the dollar, which is being signalled by this unopposed negative driver in the Asian session, or are we looking at a further thump down? Now, looking at the flows, obviously by about sort of 8 o'clock or 9 o'clock, it's easier to see what's going on. But at the moment, I would suggest that we're still in a period of euro strength, and the dollar's got further to go down. So that would be our take. So running into the European session, expect euro strength, dollar weakness, and then as we run into the North American session this afternoon, bear in mind that this unopposed negative driver in the dollar, so to exclusion of all else on the positive side, is a signal we may be getting near a floor. So you could see a dollar strength in the afternoon, as we hockey stick up, if you like. So and the commodity currencies are weak. And yet we've got equities at highs, etc. So it's all a bit mixed, but that's what we think is going to happen. So look out for a continuation in the Asian flows, dollar weakness, euro strength early on, and then if you start to see dollar strength, you know that there's plenty of elbow room for dollar strength in the North American session. So I hope that was useful. See you again for the daily briefing tomorrow. Thank you for watching.